Welcome to What the Fic. My name is Ian Cully, and this is the show where I share with you how to profit from fixed income, commodity, and currency markets. Now, today, we're talking about shipping stocks. Why shipping stocks? Well, there's a crisis going on over in the Red Sea. And, what really matters is that major transporters, shippers, are being forced to send their cargo around the Cape of Good Hope instead of using the Suez Canal. Now, the result, skyrocketing shipping prices. So I can't think of a better time to take a look at those shipping stocks. First up, the Baltic Dry Index. Now, this is the average price to transport dry bulk materials over a number of shipping routes, 20 plus. Now, we're not just talking about the Suez Canal or the Cape of Good Hope. Nevertheless, there's a lot of information here. Now, 2020, 2021, we had that supply crisis. Remember all the ships sitting out of LA? There's like hundreds of ships out in the Pacific Ocean right there off the coast of LA. This index rose 396% off of its 2020 low to its October 2021 peak. Ripped. Notice we're seeing some similar action here over the past 6 months. It's also interesting to note how cyclical these troughs are in the BDI. 2012, 2016, 2020, and now here we are. So we might have gotten a bottom late 2023, early 2024. Something to keep in mind. Now, in terms of actually how to play this rise in shipping costs, we got to look to the individual stocks. First, we have our custom equal weight marine shipper index. And what we've got here is a classic bearish to bullish trend reversal. We got that downtrend line violation, and now it's hitting its highest level since 2015, right? I love buying new highs, and there's nothing more bullish, right? Now, we've got a number of 15 components here. Let's dive in to 5 of those components, those stocks that we can actually trade and profit from. First up, Matson. Everybody knows Matson, $4 billion marine shipper, finding resistance around that 125 level. Now, if shipping costs are going to continue to rise, if this near-term turmoil becomes more of a long-term threat, then I imagine Matson's going to be trading above 125. If it is, I like it long, up towards 167. Next, Frontline PLC, FRO is the ticker. It's a $4.8 billion shipper. It also has a 10.75% yield. That ain't bad. Also notice the relative trend here at the bottom pane. Looks like it's about to break out on a relative basis versus our index. Now, I like this Frontline FRO above 23, breaking out of this tight multi-month consolidation with an upside target of 40. It's almost a double. Next, International Seaways, INSW. Now, this is a slightly smaller stock, $2.3 billion. Also coiling here over the past year on absolute and relative terms. Let's talk about relative terms. I'm looking at that lower pane, and I'm looking at this stock versus our custom index. And we want to be long the strongest, right? Individual names. And in those individual names that are outperforming our index, right? That's what I mean when I say we want to be long the strongest. So INSW long above 53, resolving higher from this nice looking coil here. I'm targeting 93. Next, Teekay Tankers, 1.8 billion. So we can get a little smaller in market cap as we move through the charts here. Now, I like TK above 56. Initial target here up around 85.50. At least you can just stair stepping. And I love how it's finding resistance, pulling back to a logical level of support that coincides with former resistance levels again and again over the past 3 years. And I mean, this stock has come a long way since 2022. It was trading below $10 beginning of 2022. Now it's all the way up there around 56. Like TNK again, above 56, targeting 85.50. Last but not least, Capital Product Partners, CPLP. Now, not quite $1 billion, but if this thing keeps going the way it has over the past couple of weeks, it's going to be $1 billion any day now. Now, it's been ripping. I imagine you could see a little bit of corrective action here in the coming weeks. But again, if this crisis really turns into something that's going to have long-term effects on the supply and demand dynamics of the shipping, I like it long above 20, initial target 24.50, secondary objective around 32. I think it's going to be ripping up there if this thing becomes a long-term problem. To recap, tensions in the Red Sea are causing marine shippers to forgo the Suez Canal and sending their ships all the way around the southern tip of South Africa. Shipping costs are skyrocketing, and the best way for us to take advantage of that is to buy the strength in these marine shipping stocks. These are just a few of my favorites. If you want more of my research and the research of all the analysts at All Star Charts, click the link below, head on over to the website, become a premium member, hang out, we have fun, and we like to buy strength, and that's exactly what we're doing in the marine shippers. Now, if there's any topics that you would like me to, to research and talk about in future episodes, hit me up. info@allstarcharts.com. I'd love to talk about anything you're interested in, dig into those topics, and share with everyone else. Hey, thanks for watching. If you enjoyed the video, smash that like button. Follow along. I'll see you next time.